Concerns over borrowing costs in Europe hurt U.S. stock prices. Deborah Kostroun has the details from the New York Stock Exchange. And Deborah, what a close it was today.
It certainly was, because the stocks were lower all day today, and we moved even lower in the last hour of trading. We closed right on the lows. We saw a lot of selling in the last 15 minutes. The concern, once again, the European leaders will struggle to raise enough money to contain their debt. And on that news, European banks were lower. That also led financials here in the U.S. lower. So what we did see, financials had a really good week last week, however, sharply lower today. And strategists say we are not anywhere near a resolution to the European crisis, so we're not totally out of the woods. And of course, here at home, we have our own deficit issues to deal with, and that will certainly be coming back into the news shortly, Pimm.
Now, Deborah, even with today's dismal performance for stocks, October, not necessarily a bad month for equities.
You know, it certainly wasn't. We did see that pullback today, but for the month of October, the S&P up over 11%. It was our best monthly gain since 1987. And remember, October typically not a great month for the markets. And so as we closed out today's session, what we did see, the S&P actually now down slightly year to date. So that's something that we did see as a result of all the selling today. Another interesting side note, crude oil, a very interesting month of October. It was up 17%. Crude surging the most since May of 2009. We closed out today's session about $93 a barrel. That's it from here, Pimm. Now back to you.
Thank you very much, Deborah Kostroun, reporting from the New York Stock Exchange.